Hey, welcome back, folks. This is the Ray Lucia Show. We're pumping it up. Talking about oil, as I promised you. I've been doing this for 40 years, and I know quite a bit as a generalist. And in the olden days, in the 80s, I studied the oil and gas business, and I've been around it as an advisor for a number of years, but never really got my fingernails dirty with oil the way this next guest has. Brandon Cox, the CEO and founder of Pipeline Oil and Gas. Brandon, thanks for joining us again this week. I am just so fascinated by this area of investing because it's been neglected by people like me for a number of years, a lot because we just didn't understand it.
And it's probably a good thing because it wasn't until probably 3 to 5 years ago that the technology and the software actually made it to where it was predictable versus, hey, let's just go take a guess and see what we can do out in the oil and gas field. If we don't find oil and we have these string of dry holes, that's okay. There's some tax benefits and it won't be really a complete loss. But now it's like, okay, you get the tax benefits, but you have the predictability to be able to locate, produce the oil at a very efficient price. And with the commodity prices being at a very nice level, there's some money to be made, really good money.
Okay, Brandon Cox, CEO of Pipeline Oil and Gas. All right, so you bring something up, all right? I don't like dry holes. I don't like anything to do with losing money. So, especially since so many people that tune into this program are retirees, pre-retirees. So help us, retirees and pre-retirees, have some semblance of security here. You talk about predictability because we all remember the dry hole 80s, right? So talk about that technology. What makes you so certain that you know the oil is down there?
So what you're saying is help me help you sort of thing, right?
Yes,
so
yes, Jerry Maguire.
It comes down to risk. Risk is everyday part of the oil fields. So we need to figure out how to mitigate that risk as much as possible. And really you're looking at it from three big pieces. The first one is, well, what if there's a spill out there? What if somebody gets hurt from an operational standpoint?
What if the environmentalists yell at you because you're fracking?
Don't say the F word.
No F word?
Okay, you could say that word. Even though down in Louisiana we don't frack. Because again,
so you don't do any fracking?
No, that's just another thing that can go wrong. You're dealing with the natural porosity of the Gulf Coast.
The P
where
word.
The oil flows up to the surface. Very efficient. You're not pulling it out of the ground like they do in some parts of the country. So you've got the operational side from a risk standpoint. Well, what if the price of oil goes down? Brandon, in the past, the oil prices have taken a nosedive.
It was like $12 a barrel.
Well, okay, what do? Well, that's where we put strategic hedges in place to mitigate the downside. So we know that, all right, we're producing at 30 to 35 a barrel, and we can limit our exposure on the market at 80 to 85 bucks a barrel. I like that. So now, okay, I can protect myself from the price of oil going down. Now, what about the third piece? Well, the dry well, that's what we're talking about, right? Well, now we're in projects that have a little bit of production on the front end. So
these are, not to interrupt, but the terminology I think you're dealing with developmental wells that are already producing, and with technology you have a pretty good idea how much is in the swimming pool.
Yeah, I mean, you're stepping into a project that already has some production. If we're going to go walk the tightrope, we want to make sure that there's a net there, right? We don't plan to fall off the wire, but if we do, we want something to catch us. Just like these projects that are producing a little bit of oil, we want to go out and drill the wells, but if we get in a situation and something goes wrong, we live in a broken world today, something goes wrong, we have something to offset it. So we're reducing our risk. So we're not going into projects where there's no production, no existing infrastructure. We're not buying something at a premium that's real mature and stable.
Can your guys, the petroleum engineers as it were, tell you how many barrels you're likely to pull out when you look at a project so you can go in with some level of predictability? Not only that, and how long that might produce?
Absolutely. You get the petroleum engineer and the geologist in the room along with the operator, the guy that's drilling the wells, and you get them sit down and they're masterminding trying to figure out this algorithm of these are how many barrels have already been pulled out of the ground. Here's the pressure behind pipe. Here's the types of rocks and the formations we're dealing with. And you put all that information together and they can tell you how much oil is in the ground, but then they can also give you a pretty good estimate of how much of that is actually recoverable, because you're not going to get every single drop. But if you can get 70, 80% of it, you're in a pretty good spot out there.
Again, my guest is Brandon Cox, and we should make mention, Brandon, that these are not CDs, all right? These are risky investments, and they are only available to accredited investors. And you can go to Brandon's website and learn all about that, pipelineoilandgas.com. But it is kind of exciting because you get some significant tax benefits along with this. So is it true that with intangible drilling costs, which as I understand it are 100% deductible, if somebody were to invest $100,000, they might get a write-off of $70,000?
Absolutely right. Up to 85% of that investment can be written off the very first year. Now, 100% of it's going to be written off over 7 years. You look at other traditional types of asset classes like real estate, 27 and a half years to deduct that property. Well, what if we could shorten that to 7 years? Wise man once said, saving money is the same as making money. So let's be smart about it. Take advantages of those tax code opportunities, and it's structured that way. The IRS, the government, wants to encourage us to reduce our dependency on foreign oil, and guess what? It's happening right now because of those tax codes.
All right, so I invest $100,000. I get a $70,000 write-off. I'm in a 40% federal and state income tax bracket. I saved $28,000 in taxes. So in reality, I have at risk $72,000 in that example, correct?
It's a great cost basis. So I run into guys all the time, physicians, for example. One of my guys, he's making $1.8 million. He knows that he's going to have to write a check for $700,000 to the IRS and never see it again. Or he can put $300,000 of it with me, and he's neutralized his tax situation. And he's got a chance to get some income. But the tax benefits make this an opportunity for him because otherwise he doesn't have any other choice but except to write that check to the IRS.
What's really interesting about the tax benefits, and you're right, the government is trying to incentivize people to invest in this, but usually when the government gives you a tax benefit, they kind of take it away with the alternative minimum tax, but they have specifically exempted oil from the alt-min taxation, which is pretty cool, so you don't have to worry so much about the alternative. I mean, obviously, see your CPA on this, but the alternative minimum tax should not present as big a problem as it normally does when you're dealing with people that have a bunch of money.
Right. I mean, you have to be smart about it. Everybody's situation's different, but the government knows. I mean, they're getting $50-60 billion a year just from a federal level. They're very big and in favor. And again, depending on what side of the fence, that's irrelevant. But you don't have to be brilliant to go, if somebody's giving me $50-60 billion a year, that particular industry, I'm probably going to keep them around, especially with our current economic condition as a country.
All right, we'll take a break. Brandon Cox, give out your number and your website. This is really critical that people become educated. That's what you're here for. You got about 15 seconds.
Well, let's just keep it simple. Go to the website, pipelineoilandgas.com. One more time for you, pipelineoilandgas.com.
That's a great website, and he's a great guy. We're going to have him on regularly because he's teaching me the oil business. Thank you, Brandon. We'll be back. Don't go away. It's the Ray Lucia Show.